What's up, guys? My name is Annie Bender, and I'm a local realtor here in Maryland with the Weymouth Group of Keller Williams Realty Center. And I have with me Chris.
I am Chris Weymouth. I'm the director of the Weymouth Group and also broker designee for KW in Maryland.
Welcome to the Way Home podcast. We also have a brand new neon sign. Shout out to Custom Neon. Thank you so much. You guys did awesome.
Yeah, beautiful sign. Isn't that nice?
So we have created this channel to help educate our local market on all things real estate, and then also have exciting guests from time to time just to talk about different events. One of them being Frank Luber, my granddad, who will be our next podcast. Mm-hmm. So here you go.
Yep. This guy, Frank, is an icon. He's an icon for Baltimore. He's been in radio and TV 60 plus years, and we're going to talk about his early beginnings, his humble beginnings when he was born in Baltimore. And then he started off in radio, interviewed the likes of Martin Luther King, John F. Kennedy, Charlton Heston, and did TV. He's an anchor for WJZ TV and went back into radio and known as the Golden Microphone.
He's pretty great, if I can say so myself. But today we're going to talk about first-time home buyers. So according to Real Trends, first-time home buyers made up 26% of home buyers this year, which is down from 34% in 2021.
And which is interesting because a balanced market with the first-time home buyer used to be close to 20 some odd years ago was 50% first-time home buyer and 50% move-up buyer. That was a balanced market. And those days of 50-50 are long gone. I don't think they're ever going to come back.
Given that prices were up, coupled with the low inventory that we've experienced, why else do you think there were fewer first-time home buyers in 2022 than 2021?
The first-time home buyer trend, we saw them being more working from home. Mm-hmm. They did not have to go into the office, for one. Then two, they had the ability, like your friend Katie, for instance, and she lived in Boston and
California,
yeah. And she's in San Diego now, and she just worked from home. Mm-hmm. And that is what a big trend where the first-time home buyer went south because those buyers were able to work from home, and they didn't want to be locked in, no pun intended, locked into a home. Yeah. And they wanted to be, and they were more mobile. Mm-hmm. And so we're seeing that it's, I just read an article on Disney today. The new CEO that just came back, he used to be the CEO, I forgot his name, but he is now requiring all Disney employees to come back to work 4 days a week. They used to be remote. Now he's requiring them to come back into the office.
Wow. So I'm going to bring up an example from the Joint Center for Housing Studies of Harvard University. And they were talking in April 2022 how the median home price was $375,510. And so in our area, that median home price can typically get you, would you say, like a small townhome or a small detached home, maybe around like
in some
1,200 square feet?
Regionally, Howard County is going to be difficult. Mm-hmm. You can probably get a condo, stacked condo.
So if we factor in the surrounding areas as well.
Anne Arundel County, parts of Carroll County, which not many townhomes in Carroll County, and except when you get closer to the Mount Airy area. Mm-hmm. Baltimore County, you can get townhomes at that price.
Yeah. So all that to say, I mean, many first-time home buyers that we've worked with are looking for that style home, would you say?
Mm-hmm.
Usually
yes,
that's the case because that's their price point.
Yeah, and also a lot of first-time home buyers we're seeing are coming from out of state, right? Mm-hmm. So we just can't limit them to the youngins.
True. Yes. Right? So Maryland first-time home buyers is first-time home buyers in Maryland, but first-time home buyers in general.
Right.
So the median income required to buy that house was $103,256 for a monthly payment that was $2,667. Mm-hmm. And this is assuming that it's 3.5% down on a 30-year fixed rate loan with 0 points, and the interest rate was 4.98. So today's rates, is putting us at like 6.5.
Mm-hmm.
And buyers right now are seeing that $375,000 home, that monthly payment is now around $2,990 a month.
Mm-hmm.
And I've seen just in our experience that you can rent houses for about $400 less than that a month
Mm-hmm.
for the same kind of house.
Right. But what are you seeing at the end of 12 months when you're renting?
So that's what I wanted to say.
12 canceled checks. That's all you see at the end of 12 months.
So if renting is cheaper, because you also have to think about they have to save up for a down payment and everything.
True.
If it's cheaper right now than buying, it's just right now, what incentivizes first-time home buyers to switch from renting and go towards buying?
Well, immediately, if you talk to an accountant, any accountant, especially with the rates being the way they are today, you're going to find that a lot of people worth their weight as financial advisors are going to say still buy, even at the higher interest rate. And we're seeing them creep down a little bit. They were at around 7, now we're on 6.5. And the interest rates will level off and they're going to ease up, and you can always refinance. So, give you an example, the number you were throwing out there for the $350,000 at almost a $3,000 monthly payment. What it really feels like coming out of your pocket is going to be around $2,500.
And why is that?
Why? Because of the tax savings.
Tell us more.
All right, tell you more. Tell me more. Tell me more. And what happens is that when your take-home pay, when you tell the people who are writing your checks at your office, you get certain amount of deductions and exemptions. When you have kids, you can take home more pay because you want to spend it on the kids and don't want to wait until the end of the year until you get your tax return to get that money. A lot of people think when they get that money at the end of the year, that's money like, oh my, I'm going to go out and buy my Apple Watch and such. Well, that wasn't. That was your money anyway. It wasn't the government's, and not give it back to you. It was your money. So what you want to do is be able to balance your take-home pay in such a way that when tax time cometh, you want to be able to owe nothing to the government, and government gives you nothing. So it's like zero. It's a little anticlimactic, but I'm telling you, once you start looking at your tax returns and you don't owe a thing when you're going back out, when you send it the return in, it's a good feeling because that's money you can be using now. You also have to be disciplined with that money. So to bring it around here, so that $3,000 monthly payment, you're writing off your interest on that, and your interest is for that payment is going to be close to $7,000, $7,300, and you're right. A year, and you're able to write that off. And what it feels like each month is almost a $500 credit that you're getting back for writing off that interest. So that's why that $3,000 payment really feels almost like $2,400 coming out of your pocket.
Got it. Interesting. So then, in that case, it's going to be pretty similar to that rental rate.
Yeah, but what's the other benefit you get for buying? Instead of
Equity.
12 canceled checks, right?
You get equity.
You get equity, yeah. And what was some of the equity that we saw last year in homes?
We saw increases of like 25% in home values.
Yeah. Now, that's not always going to be that way, but 4% was a good one.
Yeah.
Right?
Typically, that's the kind of returns you can expect, right? Yeah. And then, so other than equity and then tax benefits, what are some of the other incentives that first-time homebuyers have when buying houses?
Well, what they're finding also when ownership does provide stability, your credit scores get a little bit better. The pride of ownership is not to knock renting. For some people, renting is really the only way to go, and it's really a smart way to go, especially if you're going to be if you're more transient. However, you're going to see a lot of people in the military. They come in and they buy homes. And the reason why they do that, because it costs less. They get a housing allowance that they can use also for the purchase of their home. If they're getting an allowance to live on base, they're not losing that allowance. So they'll go ahead and buy. And VA financing is such a rich gift that we give our veterans, that they get a benefit of 0% down. So it's, it is really a benefit for the VA buyer to buy a home. The other thing is also for the first-time home buyer, they have 3.5% down.
Mm-hmm.
So you make that money up basically in your first year when it comes to equity, right?
Mm-hmm.
And so you get a 4% increase in your home. When you're
Yeah.
putting 3.5% down, you're making that up within your first year. So immediately, but that's just for your down payment. But that's equity you're putting in. So
Yeah.
you know,
So there's benefits. And also, for some people, it might feel like homeownership is not tangible. And that could be because their income is not where they expected it to be or where they can even get it to be right now.
if I could just interrupt you, because how many times have I seen these realtor videos and they say, you don't need to put 20% down to
Yeah.
buy a home.
Every video.
Yeah. And I'm thinking, we're in this business. We know that.
Yeah.
We've known that for years. But it's amazing how many people out there who don't realize that they are still thinking you have to put 20% down. Now, maybe your mom and dad told you that because putting 20% down means that you don't have to pay PMI, private mortgage insurance premium.
Yeah. So there's 3% down with conventional, 3.5% with FHA. You have 0 down with USDA or VA.
Right. Doctors, they have doctors where they do 100% financing for doctors.
So there's a lot of options. We can
Right.
get creative. And one thing that we can also do, there's a lot of first-time home buyer programs that can help buyers achieve that goal of home ownership. And some of them offer down payment assistance. There's even some that pay off a remainder of student loans up to a certain amount.
Yep.
There's actually MarylandHomeownership.com has a way to compare and contrast all the different programs that are out there.
There's a lot of them out there.
And then also couple that with a great lender. And we know Frank Antico. Go Frank
Yes,
Antico.
New Res Financial, Frank Antico. What I love about Frank is that he works equally well with the first-time home buyer as well as the experienced buyer. And he's incredible to work with. And then you couple that with myfirsthomerebate.com,
Oh, yeah.
which is a great program that's out there, some partnership with the Weymouth Group. And so you just go to myfirsthomerebate.com and you'll get a personal seminar learning about all the different closing programs out there or financial assistance programs out there for the first-time home buyer.
Exactly. So definitely I would encourage people, do your research because home ownership is it's way more tangible than it may seem. And one of the best ways to do that is to find your team, find your realtor, and find your lender. And you really want to make sure that they are great communicators because they're going to be working together for you to help you reach that goal.
And how do you find a good lender?
You find a good realtor.
Yeah, you find a good realtor.
How do you find a good realtor? You find a good lender.
Yeah, and just like how many times have we talked to a client and like I'm speaking to some tomorrow, I got a Zoom call with 4 clients coming up. And after my first consultation, they just knew. They felt so comfortable working with me. Same thing with the lender. You'll know it. When you talk to a lender, you just feel it in your gut that these people are going to be, they're going to be looking out for me.
Yeah. So we're over 1 week into 2023. What are you seeing in the market so far? What are your predictions and what are your hot takes on the market?
I'm seeing in my field, just based upon the calls I'm getting from sellers now and talking to buyers, because we do a combination. We're very diversified in our business at the Weymouth Group. Not only do we do residential, we do new homes and sales and marketing. We do land acquisition and development and commercial sales and leasing. And overall, everything is starting to pick up. And we're talking to the sellers who were thinking about putting their homes on the market and around Thanksgiving, or we were talking about putting their homes on the market around Thanksgiving and the Christmas holidays, are definitely going to be putting their homes on coming up in January and February. So I'm seeing that, in my opinion, we're going to see an uptick in inventory. So we're going to have more inventory out there. We're not going to have as many buyers. So still, even with the uptick in inventory, the sellers still are going to have to make sure that their homes are primo, because buyers are going to be pickier.
Yeah.
They're going to have a little bit more to choose from. So I think we're going to have an uptick in inventory. Still be low, historic lows. I think today's our absorption rate is still going to be depending upon the county, but in the central Maryland area, it's probably good. It's definitely going to be anywhere between 21 days to 30 days, maybe less than the 21 days.
Wow.
So that means that we're still going to have low inventory, but it's going to be an uptick of what we were seeing in the fall. Couple that with the lower interest rates, buyers going to come out. They're going to be a little bit more emboldened. However, that buyer, it's not going to be as many buyers, I don't think. I really don't think, because we're seeing the softening in the rental market as well a bit. Just a little bit, not much.
Also with the market where we're at right now, so spring market has started. And we've seen some homes at the market. I know you've had calls from agents where we're seeing multiple offer situations.
Yeah, that's still out there. And those for the best homes in the best locations and schools and stuff like that. And so they are seeing multiple offers, and sellers are still adopting that strategy of pricing it in the market, not above it, but in the market, a little bit below, create that urgency and getting more eyes on that home. And once you get more eyes on that home, you get an opportunity for more offers.
Yeah. And that's what I have to say. As far as the ones that I've seen that I showed this weekend that are either multiple offers in with deadlines or have already gone under contract, they're priced very, very well. And they showed very, very well.
Yes. Or the location's excellent.
Yeah, exactly. So you're thinking there's going to be less buyers. I have here mortgage rate projections, and I can put this on the screen as well. This is from Keeping Current Matters. And this averages 4 different opinions from Freddie Mac, Fannie Mae, MBA, and NAR. And for Q1, they're predicting the interest rates will be 6.58. Q2 is 6.35. Q3 is 6.2, and then Q4 at 6. What are your thoughts on that?
I think between Q2 and Q3, you're going to see them going below 6.
Really?
If not sooner, because of the less buyers, they're going to want, they want more buyers out there. It's going to be you're going to find some agents out there. They were struggling for inventory, and still are, but they want buyers, and you're going to find it's not going to be that many buyers as they were in 2022. That's my opinion.
And why is that?
Well, because interest rates were higher, for one. And so I'm talking about the beginning of the year. Even though we're seeing multiple offers coming out right now, if this was 2022 at the same time, those multiple offers were just probably going through the roof.
Yeah.
Right?
It's, definitely not like that.
So, it's not like that right now. So I think to stimulate more buyers coming to the market, they're going to have to lower the interest rates. And it's probably not going to be driven by the Fed. It's not going to be driven by the Fed. It's going to be driven by the direct lenders who are going to be cutting down their rates a little bit because they were making a lot of money.
Got it. So then what would also your advice be? Because I know some buyers, some first-time home buyers especially, kind of sidelined themselves last year just because they couldn't compete and rates started to go high. So they just found it was much easier for them to just hold back and rent. What would you say to those people that sidelined themselves last year and are on the fence for this year?
Buy. Even though the interest rates are high, they're going to come down. You're going to be able to refinance. So definitely you want to buy.
Yeah, if you are thinking about buying this year, if you're on the fence, I would definitely get your team together now because you want to make sure you have a realtor that can write a good contract for you and represent you, and then also have a lender that can have a pre-approval for you. So that way you're going into this market just ready to hit the ground running. So y'all, thank you so much for sticking with us to the end of this video. As always, if you have any questions, please feel free to reach out to us. Our contact info is here. You're not doing anything where you point to it. There you go. Our contact info is here. And we'd be happy to help you in your home buying journey. And then also if you need a commercial realtor.
Absolutely. We're experts in land acquisition and development and all new homes construction and also commercial sales and leasing.
Yeah, so we hope you found this helpful. And if you did, please like and share with your friends. And we also
check out our Zillow reviews.
Yes, check us out on Zillow. We have awesome Zillow reviews from amazing clients. And thank you so much.
Bye. See you next time.
Bye.